money. You know, there's really two ways to think about liquidity globally, macroeconomics, fiat. There is one, what is the price of money? And two, what is the supply of said money? Now, traditionally, I'm more interested in the latter, in the supply of said money. Why am I interested in that? Well, we've seen Bitcoin go from 16K to 126K while rates were at 4+% in the United States. And that was on the back of the fastest rate hike ever. And I've explained on the show, the reason Bitcoin was able to rally so much is because liquidity came from the US Treasury. This idea of fiscal dominance. Global sovereigns, and specifically the United States, is so indebted that it has to find liquidity at all costs. It can't solely rely on the Fed anymore. You get this idea of fiscal dominance when the US government is really driving policy for money. So to me, the quantity of money has been more important and will continue to be more important. But the other very important variable is the price of said money. And the price of said money is set by central banks, and that is known as the rate. And so what we're seeing is all of a sudden, Japan went from very likely not to hike rates to very, very likely to hike rates overnight. Now, why is Japan hiking rates relevant to Bitcoin at all? It is so funny typing out these titles like, what does Bitcoin, this magic internet money that this anonymous person leaked on a mailing list, tell me about Japan, this country on the other side of the world, as I sit in Chicago? So I read this tweet. This chart is single-handedly bringing the entire crypto market down. Japan 10-year bond yield is now at its highest level since 2008. Bank of Japan is about to do a rate hike at the next meeting, which will make things worse. Cheap borrowing will be over, and people will sell their assets to repay the debt. Crypto is the most liquid asset, so it's dumping the most. I think we can soon see the impact in other risk assets as well. So this, guys, I'm actually going to skip to this slide. This has happened before to this industry. And I've referenced it, and I want to spend a little bit of time talking about it. It's called the carry trade. The idea is Japan has been the cheapest capital to borrow in the world because rates have been set literally at zero. Sometimes they've been negative, where you get paid to borrow money. And even as they have hiked rates as of recent, the rates are still unbelievably small. Why is that relevant? Well, what the carry trade is you source capital, you borrow money in Japanese markets, in yen, and you invest that money into risk that performs and out-returns the rate. Common thing to do is to borrow yen and buy the Mag 7, buy the S&P 500, buy NVIDIA, buy Bitcoin. You're taking free money. Think about what Michael Saylor has done. What was the innovation initially? He was raising money at 0%. Would you borrow $1 billion if it cost you nothing? Probably. I would. In fact, I am. That's a lot of what 21 plans to do. And so there was what's known as a carry trade. The carry trade is very simply borrow where the capital is cheap. You know, when the US has interest rates at 4+%, that's not cheap. When the yen is at interest rates of 0 or negative, that's cheap. As the yen strengthens, or as the cost of the yen, the cost to borrow strengthens and rates go up, this trade starts to unwind. All of this to say, the reason why the title of this episode is What Bitcoin Tells Us About Japan, the yen is the world's margin loan. The yen has played a very critical part in global liquidity, okay? The yen has supported risk assets very, very, very much so. Where if this trade starts to unwind because Japan has to raise rates, it will be very bad for assets, particularly risk assets. And so as I always say on this show, what does Bitcoin do a phenomenal job at? Telling us the truth. Bitcoin's unbelievable, the best in the world at being a free market that can be honest and that can tell us the truth. What is Bitcoin telling us? Global liquidity, no bueno. So I read the tweet. In July 2024, the Fed cut rates while the Bank of Japan raised rates, leading to the unwind of the carry trade. Bitcoin capitulated into it and found a low 1 week later. Good chance this happens again on December 10th. The Fed cuts and the Bank of Japan raises rates, excuse me. So maybe Bitcoin finds a low mid-December.